In this video, I'm going to be showing you my high win rate trading strategy and how I was able to catch 2 good trades trading with this strategy. Recently, I did a live trading call with my Telegram trading community, and inside we did some live market analysis and answered some interesting questions. And the good thing is I recorded the full live trading call so you can watch me trade and analyze the market live. Make sure to pay close attention and let's get started. But before we get started, I'd like to do a quick shout out to the sponsors of this video for the next. If you're struggling with little capital to trade with and you're looking for how you can increase your capital to make more money, for the next is one of the best prop firms out there, and I'm going to be talking more on that later in the video. Let's get started. Basically, the way I'm going to start it out is I'm going to analyze the currency pairs that I have on my list. First of all, I already have a few of them that I'm going to be looking at. I have them tagged with red, so I'm going to go over that. So the first currency pair that I'm looking at here is EURGBP. For those of you that were at the live class yesterday, you know that I talked about the high and low of the previous day and high and low of the week, right? So if you look at this, you can see I drew out a zone here. I'm actually in this trade right now. I entered around somewhere here, but I've moved my stop loss to like this area here, close to break even. I'm actually expecting this to buy to the upside. So this is you can see this is a W formation here. You can also see a mini W formation happening here. Also looks like a mini head and shoulders pattern that I'm seeing here. But the time for this has expired. So anything that makes it come back all the way down here, then it's not gonna work out anymore. So if price comes all the way down here to this line that I drew out, the trade is gonna be invalidated. It's not gonna be invalid anymore. The setup is not gonna be invalid anymore, because usually if you enter a trade or if the market makers give you an entry, you should be in profit after 2 hours. So if you count, let's say this is the original entry here. If you count 2 hours from there, you can see 2 hours with this blue candle here. So if price comes back down here, then it's going to be invalid. But apart from that, I'm expecting this to continue up, because if you look at price action, you can see that price has been trending to the downside for a while, for about 3 to 5 days. So that's, let's see, from this highest point here. So let's count. That's 1, 2, 3, 4, 5. That's 5 days. And in 5 days, the levels are usually completed, right? Market maker levels are usually completed. So that's going to give you 1, 2, 3 here. So I'm expecting a reversal on this pair, as today is Thursday, expecting a midweek reversal. Might not happen. If they come back here, then it might not happen, unless maybe they want to give another setup like this for a W formation. But if they stay above this line, then this should continue up, right? So that's what I'm looking at for this pair. Then if it's going to continue up, I mean, the first area that it should be able to reach is this area here, first of all, and then probably maybe by tomorrow or by the end of the day, maybe this area here. But we'll see how this one plays out. Did you know that one of the biggest problems that traders face is lack of capital? Because it's very difficult to try and grow a $30 or $50 account and make a significant amount of income. But that's not a problem anymore, because of the sponsors of this video, FundingNext. With FundingNext, you have the ability to trade larger capital, like a $5,000 account, a $50,000 account, and even up to $300,000 account to trade with. And the crazy part is, with as little as $32, you can get a $5,000 account to trade with. And that's not all. When you pass the challenge, you get refunded the amount that you used to pay for the challenge, and you get to withdraw any profit you make from the account. So basically, you get your money back plus the money you made from trading the account. So instead of trying to double a $30 account, you can just get a $5,000 account and make 5 to 10% of that, which is already like $250 to $500. So if you want to get an account with FundingNext, make sure to use the coupon code FNDANFX and click the link in the description below to get an account. Right, so the next pair that I'm looking at, let me go to the 1 hour charts. The next pair that I'm looking at is, let me see, CADJPY. What am I even looking at there? Okay. This one I was expecting this one to I was expecting CAD CHF to go all the way up to this area and then reverse from there down. But it looks like they are not going to do that because the reason why I'm looking for a reversal is because the levels has been completed on this one. You're going to see they have been going up and they actually started going up from Friday or Thursday. Yeah. So you can see we have this uptrend like this. So, and this is Wednesday, Thursday. Like I explained yesterday in the live class, you usually get reversals on Wednesday and Thursday. So I was expecting this to come up here and then reverse for a midweek reversal. But they could also give like an M formation here and then reverse, which looks like what they are doing right now. So let's go to the 15-minute chart and see. Yeah, looks like a an M formation. Looks like an M formation where they are just spiking the highs like this. So they spike the high here, came back one more time, came back last time, which goes above the first one. Sorry, the second one. So this looks like an M formation for a continuation back down. This already is a sign that they want to reverse. Whenever you see that they do like this and then pull back and start consolidating like this, there are only two plays from here. You either go up, stop on, come back down, or a drop like this, right? Which looks like what's happening here. You have this like this information and then drop. So I think I don't believe this is gonna come back up here today anymore. So they might just reverse from there, maybe get to this point here by tomorrow, most likely. They should be able to come to this area. What's the ADR? The ADR is 53 pips. So if the ADR is 53 pips, let's measure 53 pips like this. 53 pips about down here. So yeah, they could reach these points either today or tomorrow if they're going to continue down. Let me cross check and see if the levels are complete. Okay, so we have peak formation, level 1, level 2, consolidation, and level 3. Yeah, the levels are complete. So yeah, I believe this is gonna sell. CAD they should be able to sell all the way to this zone down here for about 40 pips. Then where's the card? This one has been trending to the downside. It's been trending to the downside. We have 3 levels completed here. It's like the opposite of CAD CHF. The only difference is this one didn't really get to this low. Didn't really get to this low here. Looks like it's consolidating. It's just gonna consolidate throughout today because the Asian session highs and lows. This is the Asian session high and low, and price is just inside, so that's just consolidation. Maybe tomorrow you might get something like this and then reverse back up. But at the moment, this one is just going sideways, so nothing really interesting to look at here, except maybe they come down here, which I doubt. I don't think they're coming down here. I think they're just going to consolidate. We have another pair here. USDJPY. This one, I'm actually looking for sales on this pair. They're currently at the high of the week. So you can see this is the high of the week, the highest point of the week. Price has been going up. Price has been trending to the upside. We have this trend that started here on Thursday going to Tuesday. They set the high of the week on Tuesday, came back down. We have this consolidation here. Price breaks to the upside for a stop hunt above this level. So if you go on the 15-minute chart, I'm going to be looking for sales here. So this looks like a stop hunt. Yeah, this looks like a nice setup. Looks like a nice setup. Wait, give me a minute. Let me check something. That's it. Yeah, so this looks like a nice setup. Looks like a nice trade. Looks like a stop point above this high. If it's gonna reverse, then I think a good place to target would be here. This would be a good place to target. And then probably maybe down here later on. How many pips from here to here? That's about 112 pips. So actually, this is a nice trade to take on this USDJPY. This is a nice setup. I'll be expecting this to go all the way down here for like 100 and something pips. There's a pair that I was looking at, CADJPY. Yeah, I like this. I like this. Let's see. This one's also at the high of the week. It's like a similar setup here. Let's see. 120 pips. That's like 12 pips, right? Okay, this looks nice. Then where's the JPY? Let's see, let's see, let's see. Where's the JPY? Mm. Yeah. Yeah, so this pair, I'm expecting this pair to drop, maybe come to this zone here, drop all the way down here. These are CAD JPY and then USDJPY. I'm also expecting this one to also drop all the way down here. Let me see. I think there's another pair. Let's see, EURGBP, EURGBP, EURGBP. Okay, this one hasn't gotten to This one hasn't gotten to. Someone says no audio. Can you guys hear me clearly? Someone says no audio. Can you guys hear me clearly? Let me know in the chat if you guys can hear me clearly. Okay. Okay. Seems everyone can hear me clearly. Someone says, do I trade US 30? Nope, I do not trade US 30. I only trade currency pairs. The pairs that you see here are the only pairs that I trade. The pairs that you can see on the screen here, these are the only pairs that I trade. Someone says, can we take the trade after now or after news? Is there news? What news? Is there any important news? There's no important news. I think I saw USD news by like 1:30, but it's not like heavy. Yeah, we have USD news by 1:30. We have USD news by 1:30, but it's not really gonna affect the other currencies, gonna affect just USD pairs. The other ones are just gonna just maybe just move a little bit, but not really that much. And it's not like NFP or CPI or something. It's just a minor news events. This one is still here. EURGBP. Okay, this one broke the high, so there's nothing here anymore. This one I was looking for sales. I was looking for sales on this GBJPY earlier at this high, but they broke the high. So remember I told you if they break the high, then it becomes invalid. All right, and they broke the high, continued going up, didn't even bother to enter back. You can see they're all the way up here now. If they had broken the high maybe with this candle and then entered back in, then I'll be looking to sell. But this one, yeah, that's gone too far. So if they even try to enter back in from here, your stop loss is going to be too large. You want to put your stop loss here and then your entry is down here. Like that's going to be too much. So this one is just invalid for now. GBP, JPY. Okay, I think I was looking at one. Yeah, cat CHF Wow, that looks nice. I like this. I like what I'm seeing. I like what I'm seeing. This is clean. What's up with this Wi-Fi? Okay, yeah, let's see. This one came to tap the high, which is also at this high here, which is the high of the previous week, high of this week, came to tap it the third time. So that's basically three times that they are tapping that area after I think they were in an uptrend early. Someone's drawing on my screen. Please stop drawing on my screen. Stop that. That's disrespectful. Stop drawing on my screen. So this one has tapped the high three times after this huge move up. March. Let me see. Staying with that. Yeah, basically this is the highest point for the month. It's the high of the month. So this is the highest point for March. This areas here. So you can see how they set the high here, came back, tapped it again. If you were trading during Asian session, this would have been a good sell at that high there. But they came back here now today. So let's see, maybe we can get a reversal off of that high. We have this consolidation here. Let me see on 15 minutes charts. Okay, this one I would like to see one more push to the high, something like this. Let's see something like this. Okay, let me check the charts. Okay, so can you go over GBP AUD? Okay, GBP AUD. Let me see. Someone says I should go over GBP AUD. Let's go to the 1 hour charts. Let's see. Okay, we have the high here. 1, 2. This one looks like they're in a large range. They're in a large range, but inside this large range, we have minor trends, like this trend here, and this trend here, and then this trend here. But what I'm seeing, my bias would be sells because of they reverse from this high, and they've gone only 1, 2. They've gone only 2 levels. All right, so my bias would be sells. Let me see how it looks on the 15-minute charts. Okay, on the 15-minute chart, looks like they consolidated throughout today. They've been consolidating. So this one, let me see at the end zones close by. This one, this pair doesn't usually move well during New York session. Doesn't really move much during New York session. So I won't advise trading this pair during New York session. The time that it moves the most is Asian session and London session. Sometimes it moves during New York, but because of the way it's structured, you have GBP and then you have AUD. GBP, for example, GBP moves during London and AUD moves during New York. Sorry, moves during Asian. So the most active times for this pair would be London session and Asian session. So if this breaks out like this and gives maybe a sell, it's not really gonna go anywhere unless you're gonna hold it till the next day for it to move during Asian session. So if you get an entry during New York session, if you hold it till London till Asian session, then you might get some movement on that. But basically, what I'm looking at on this pair, if I'm gonna look at this pair, I'm looking for sales, and I'll be looking for something like this to take it back down, or something like this. All right. Let's see. Someone says, I like this question. This is an interesting question. Someone says, um, let me see. Someone says, can this strategy be used in trading indices and BTC? That's basically you're saying crypto. Well, crypto is another market and it does work. The concept does work on BTC, but you need to understand the timing for crypto. Crypto might have a different timing. It might not just be London session, Asian session, New York session, although those times are available there. But it's just about what time do they move? Does it move during Asian, or does it move during London, or does it move during New York? Let me look for. Okay, I think this should be a better one. The concept still works over there. Let me see if I can find an example. Yeah, for example, the midweek reversal or this daily structure and weekly structure happens. It happens on crypto. Now, this is Bitcoin. If you look at this at the start of the week and at the end of the week, usually this one, because crypto has Saturday and Sunday. So this is Saturday here and this is Sunday here, and the market is open on forex. Forex just ends on Friday, so you have to also take that into account. What they do is they use Saturday and Sunday. They use Saturday and Sunday to make the consolidation. So they use Saturday and Sunday for consolidation, right? And then they make the breakouts during like Monday, Tuesday, and then they reverse midweek. They reverse midweek. All right. So if you look at this, you can see this consolidation here. You can see this consolidation here. What do we have? What do we have? You have consolidation, break to the downside, W formation, reverse back up, spike the high. So basically, if we just turn this to a line chart, you can see consolidation here and consolidation here. They break to the downside, W formation, break to the upside, M formation, and come back down end the week in sideways consolidation. If you go to another week, you're gonna see the same structure happening there. So you can see Saturday, Sunday, they use it to consolidate. They break to the downside, W formation at this low, right? And then they reverse back up on Tuesday. We go to the next week. Let's see. This one, we do have a W formation here. Consolidation, break to the upside, reverse back down. So the concept the concept happens on crypto too. So like look at this week here. We have consolidation Saturday, Sunday, consolidation Saturday, Sunday. What happens? They extend it downwards, reverse back up, go above this high, goes and takes out liquidity above this high also. This is a stop hunt, sell from there. All right, so the concept happens. The high of the week, low of the week still happens here. You can see this is the high of the week here, M formation. You can see the same thing that happens in forex. You have high, come back down, come back, stop on the high, sell somewhere there. You have the low of the week, draw your box, low of the week, come, stop onto the low, reverse, back up. All right, so the concept happens on crypto also. Can I analyze your USD? Okay, your USD. Your USD reversed from this low. So this one, if you're going to look for anything on this pair, it have to be tomorrow. Probably you can wait for them to consolidate, to end the day and consolidate. Then tomorrow you look for something like this to take it back up. All right, so that could be like a shoulder, head, shoulder pattern. So basically just wait tomorrow for the consolidation during Asian session. London session, look for a breakout to the downside, and then look to take this back up tomorrow for buys because they've been going down. 3 levels has been completed. 3 levels has been completed. We have level 1, you have level 2, you have level 3, right? So 3 levels has been completed here. So this has already started the reversal back up. So it has started reversing back up. All you have to do is wait for tomorrow. Whenever they start the consolidation, I believe they could start the consolidation like up here because we have this zone here. So they might just step onto the zone and then come back and then start consolidating here. Then you can expect a daily structure pattern to happen like that tomorrow on USD. Let's see. Let's analyze USDJPY. Someone says, I feel like okay, let me copy this and put it here. Someone says, I feel like I always catch small movements. How do I catch the big movements? Well, if you're going to catch big movements, it's unless you're swing trading. I don't know how big or what's your definition of big. I don't know what your definition of big is. But if you want to catch very big movements, you have to swing. You have to hold your trades to the next day because sometimes when you enter a trade, they want to make the full complete movement. So maybe, let's say, for example, you buy here, right? They might just end the day sideways like this. And then the next day continue up, right? So if you're holding this trade to the next day, then you'll be able to catch this move. But if not, then you catch just this small one. So it just depends on what your style of trading, if you're swing trading or if you are day trading or scalping. Scalpers usually catch small price movements. Day traders like me catch the trade at the beginning of the day or middle of the day and then close the trade maybe at the end of the day. That's basically what we do. All right. So someone has asked another question. It says, let me see. I wanted to know about stop loss placements. Best place for one and liquidity sweeps. Once one takes place, is it okay to place SL at tip of the week, or what is your recommendation? Okay. If you're placing a stop loss, do not place your stop loss at the tip of the week. Do not place your stop loss at the tip of the week. Let me show you how I usually set my stop loss. Now, for example, if you have, let's say you enter on an M formation like this, right? So you enter an M formation like this, you put your sell here. Don't put your stop loss right at the tip like that. Don't put your stop loss at the tip like this. The reason for that is because sometimes what they will do is, what price can do is they could come, take you out, and then move, right? Sometimes they could give you an M formation, stop on that M formation, and then reverse. And then you end up hitting your stop loss. But if your stop loss was like here, what will happen is when they do the stop hunts, this won't catch you out. So you still be in the trade, and then it will go in your direction, right? So don't put your stop loss. Sometimes they don't even need to do that. Sometimes they will just do something like, sometimes they could just do like this, then reverse like that. And then if your stop loss is too tight, they will take you out, right? So a good rule that you can use to set your stop loss that I found out to be like one of the safest ways to put your stop loss is making use of the ADR, right? The ADR, you see this number here. So basically ADR means average daily range. So ADR means average daily range, which is basically the average price movements, average peep movements that currency pair moves in a day. So if the ADR is 100 pips, if ADR is 100 pips, it means on average, that pair moves about 100 pips. So this is what you use to measure volatility, right? So for example, you can see ADR here on EURUSD is 76 pips today, right? So is the average over a couple of days. I think mine is over 14 days. It's the average of over 14 days. So what the indicator does is it takes the average price movement or average peak movements for 14 days, which is like 2 weeks, right? Or no, 3 weeks, since it's 5 days per week, right? So it takes the average and then divides it and then gets the that's how it gets the pip here. So that means on average, it moves about 100 pips. So USD now moves about 76 pips. Now it usually adjusts itself with price. So if the market becomes very volatile, the number is going to increase. If the market becomes less volatile, the number is going to reduce, right? So a good number to use is either 14 or 21. You can use either 14 or 21. 21 is more long range, it's more broad. 14 is more if you're like day trading or scalping or something, right? So that's how you use the ADR. So how do you use the ADR to calculate your stop loss? What I do is you take 5 to 10% of the ADR. So for example, if the ADR of that pair is 100 pips, the ADR is 100 pips, you take 10% of this or 5%. 5% of this would be 10%, 5% of this would be 5 pips, right? And then 10% of this would be 10 pips. So now what you do is you apply that 10 pips or that 5 pips to the high of the day. So you do something like this. You go, let's say you sell here. Let's say you sold here. You add, and let's say the ADR now for this pair is 100 pips, and you sold here. What you can do is, if it's 10% if you're using 10%, so you can use either 5% or 10%, depends on what you're comfortable with. If you're more aggressive, you can go with 5%. If you're more conservative, you can go with 10%. So let's say you use 10%, which is 10 pips, right? So you're gonna put your stop loss 10 pips above this week. So you put 10 pips above this week, that's gonna be all the way up here, right? That's gonna be all the way up here. That's 10 pips. That's if you're conservative. So if you entered here, your stop loss is gonna be all the way up here. That's where your stop loss is gonna be at. Wait, give me a minute. Let me check something. Okay, so your stop loss is gonna be up there, all right? You still get a 1 to 2. Like from here to here now is already a 1 to 2 risk to reward. All right. If you're swing trading, the stop loss, you can hold this maybe like a 1 to 3. If you hold it all the way down here, that's a 1 to 4. Right. So that's a good rule of thumb to use to measure your stop loss above if you're trading at the high of the day or low of the day. If you're using a 5%, if you're using 5% of the ADR, then instead of 10 pips, you're gonna go with 5 pips. So you're gonna measure 5 pips from here. 5 pips is gonna be 5 pips is gonna be here. So if you measure this is 5 pips, right? So this is 5 pips above. Came close. This came close, but there was enough room, so price didn't hit stop loss. But if you had put your stop loss like here or here, you would have gotten stopped out and then trade would go in your direction. So that's a rule of thumb: 5 to 10% of the ADR above the high of the day or low of the day. That's a good rule of thumb. For example, let's say you enter the trade here. This is just an example. I'm not saying that you should enter here. I'm saying this is an example. So let's say the ADR for this pair now is 9.4, is 94 pips, right? 94 pips. You can just approximate this like 90 pips or 100 pips. Let's just, for calculation, for ease of calculation, let's say this is 100 pips, all right? So basically, we're using 10% of this. 10% of this is going to be 10 pips. Is going to be all the way up here. So that's going to be 10 pips, all right? If you use 10 pip stop loss for this trade here, you won't have gotten stopped out. If you use the 5 pip stop loss, then you would have gotten stopped out here and then you enter again, right? So that's just how I measure my own stop loss. Let me look at these trades. Let me see how they are going. What's wrong with the Wi-Fi? Hmm. Okay, okay. Yeah, it turns out this one hit me at break even. This one hit me at break even here. This looks like the game. I told you guys that if they go below this, if they go below this line, then they're most likely gonna do something like this, which is what they're doing right now. This looks like a stop hunt. Looks like a stop hunt below this low, below this low. If this candle closes well, this should be able to go up. Let me look at this one, CAD CHF. This one is still going down. Let's see, USD CAD, nothing. USDJPY. Okay, this one is going well. This one's going well. EURGBP. Did I enter? Oh, okay. It didn't touch the box. Then CADJPY. Let's see, CADJPY. Yeah, this is going nice. CHFJPY. Yeah, okay. They're going nicely. So let me go back to the charts. Let's see. Maybe explain how Funding works, how to buy an account, but I don't know where to start from. Funded next. Okay. Someone says, wait, give me a minute. Yeah. Someone says I should explain how Funding works, want to buy an account, but don't know where to start from. Well, Funding is basically, Funding is a prop firm. They act like investors. They give you capital to trade with. All right. So, but you have to buy the account size. They're giving you account sizes to trade from. You have a 5K account, 10K accounts, $10,000 account, all the way up to $300,000 accounts to trade, right? So what happens, the way it works is you pay to get the account. For example, the 5K account is about $32, right? So when you pass, they'll give you a test, they'll give you a challenge to pass. When you pass the challenge, then they'll give you access to the account to trade, and then you get a profit split from the account. You get a profit split from the account. For example, let's say you have a $5,000 account. Let's say you get a $5,000 account, 5K accounts. You have to pass phase one and phase two. So in those phases, you have to make a certain percentage of profit, for example, 5% or 10% on each phase. And then when you pass, then they give you the $5,000 account to trade with. And then any profit you make from the $5,000 account, they get a profit split. So let's say from the $5,000 account, you made 10%. 10% of $5,000, that is $500, right? So that's $500. So from the $500, they are going to take a certain percentage from this $500. So for example, they can take like 10% of this $500, which is they will take $50 while you hold $450, right? So you take home $450 while they take $50 from this 10% that you made. That's basically how it works. So they take a profit split. It's like, just for example, let's say someone gives you, let's say a friend of you, maybe a friend gives you money to trade. The friend doesn't know how to trade. He gives you money to trade. And then you are the one that's going to trade the accounts and make money. You make money, and then both of you split the profits. That's basically how the platform works. But you have to pass their challenge first, and you have to pay to buy the accounts. That's how it works. Let's see. Which currency should I use as a beginner? So how could you elaborate more on how to mark the high and low of the previous days? Okay, someone asks how to mark. Okay, let me just write it down so you guys can see it. So someone says, how could you elaborate more on how to mark the high and low of the previous days? It's not hard. I have an indicator that automatically marks the high and low for me. For example, this is the high of the previous week. This is the low of yesterday. This line here is the low of yesterday. All right. Uh, the high and low of the previous day is just the highest points of the previous day. It's not really that difficult to see. Just the previous high of the previous day or previous low of the previous day. That's just what it is. So I should check USDCHF. USDCHF. USDCHF, with what I'm seeing here already, this pair is not really gonna go anywhere today, because anytime you see that price moves during Asian session and forms the low, forms the high, and price is just inside there, just know that that entire day market's not really going to move. It's just going to be in consolidation. This is just sideways. It's not really going anywhere. There's nothing really happening on this pair. But my bias for this pair though is buys. I'm looking for buys throughout this week, throughout next week. I'm going to be looking for buys. So you can see, remember I bought here last week. I bought here this week. Let's see, we're going to get more buys next week. The reason why I'm looking for continuous buys is because price has been going down all for months. Price has been going down. So at this point here now, you can see the reverse. This is a big fat W formation, right? So, and they've gone only one level. This is level one. They've gone only one level. So I'm expecting two more levels back up. So this one, be looking for buys tomorrow. If you can get a daily structure tomorrow, that would be good. We get something like this, consolidation and then break and then reverse back up. That would be good for tomorrow. But right now, nothing. So I should check gold. XAU USD. Gold. Okay, gold is at the high of the week. I told you guys yesterday that gold is bullish, that I'm gonna expect this to continue back up. I don't really, my bias was to the downside, but I expected it to continue back up. Right now it's at this high. It could sell, but I don't really recommend selling gold. Gold is not really something that at the moment you sell. Well, unless you're gonna sell temporarily. But it's actually very bullish. So I don't really think this is, I mean, market can do whatever it wants. If you're gonna sell this, you're gonna take it to sell. This would be a good place to sell. If you're gonna sell this on gold, but this will continue up. Maybe it could go down like this and then maybe go back up. I do not know. But if I was to trade gold, I don't trade gold. So if I was to trade gold, this would be a good area to sell. Let's see. Can you do currency space? I have short. Yeah, I'm short on JP on CADJPY too. I'm also short on CADJPY. What is the difference between them? Someone says, does moving from one mentor to another help someone trade? No, it does not. That's one of the biggest mistakes you're going to make in your journey of trading. I made that mistake and it cost me an entire year. It cost me a year of trading, like wasted time, because I was jumping from one mentor to another to another. It was, and the funny thing was, it was inside one concept, but had different mentors. I'm learning from this one, then learning from this one, then learning from this one. You're gonna confuse yourself and you're not gonna know what you're doing. If you're trying to mix SMC and then trying to mix it with BTMM and then mixing it with support and resistance, supply and demand, order block, and plus M and W, if you mix all those things together, you're gonna confuse yourself. Stick to one setup, stick to one strategy, stick to one style of trading, one that suits you, and then just stick to that one and stay on that one. If you start jumping from one person to another, you're gonna confuse yourself because everyone has different styles of trading, everyone has different ways of looking at the charts. You should find one person to trade with, follow the person's style of trading, person's strategy, person's thinking and everything. Don't jump from one mentor to another. Someone says, which indicators am I using? I'm using only two indicators. I'm using FXN Asian session range and FXN week and day separator. These are the two moving averages that the two indicators that I'm using, Asian range and FXN week and day separator. If you look here, you can see that is what is on my chart. Let's see. What's the difference between SMC concept and ICT concept? I do not know the difference between SMC and ICT. Some people say that there's a difference. Some people say there's no difference. ICT says it's the one that created SMC. I don't know what's going on there. There's a confusion that's there, obviously, but I don't know the difference between that. All I know is that they trade order blocks. There's fair value gaps. There's institutional orders and all those stuff, liquidity and all that. That's the only thing I know about that. I don't really know much about ICT concepts and SMC concepts. If you tell me to draw a what do you call it? FVG, fair value gap. I don't know how to draw that. The only thing I know how to draw is order block. I can say, okay, because order block is not really that hard to identify. You can say, okay, this is an order block here. Price came and rejected off that order block. That's basically what I know about order blocks. Will this recording be available for a rewatch? Yeah, I'm recording this one. I don't know what happened yesterday. I recorded it, but it didn't save. I don't know why it didn't save. This one should save. This one I'm recording, this one it should save. Uh, Someone says, can you show the steps you take when you first get on the charts? The steps I take when I first step on the charts. Well, first thing I do is I go on the 1 hour chart, identify, like if you notice throughout this call, when I'm analyzing the pair, I first go on the 1 hour charts and I look for the trend and then specific areas on the charts. So if I identify, okay, this is an uptrend and then price has moved down, I'll say, okay, if I'm going to trade a reversal here, if I'm looking for reversals, then this is a good area to reverse from. If If I'm looking for continuations, then I know that I'm going to be looking for a tight Asian range, and then this looking for this if I'm looking for sells, right? So once I've identified the trend and I've identified where I'm looking, if I'm looking for buys or if I'm looking for sells, then I go to 15-minute charts to look for an entry. Simple as that. I don't go to the weekly time frame or the monthly time frame or the daily time frame to look for anything. I just stick to the 1 hour chart and the 15-minute chart. That's all. Because I'm day trading. If I'm swing trading, then maybe I'll go to the 4 hour chart. But as I'm day trading, I don't really need to go to the 4 hour chart. I can see everything from the 1 hour charts clearly. Yeah, JPY pairs usually move in the same direction. They move in all JPY pairs move in the same direction, although there are some differences in price, but overall they end up going in the same direction. Someone says, please, I don't know more about FNNS. Okay. Do you do? Yeah, I do one-on-one session on Zoom. I do one-on-one mentorship. If you want one-on-one classes, then you can just message me and then we can talk about it. Message me on Telegram and we can talk about it. I'm kind of doing well on that one. Break even trade. I said break even after 2 hours. So if I enter a trade after 2 hours, if the trade is not in profit, if the trade is in profit, I just move my stop loss to break even. That's what I do, right? So once 2 hours has elapsed and the trade is in profit, I move my stop loss to break even. If the trade is in loss, I close the trade. I don't let it hit my stop loss. Once 2 hours has reached, I close the trade. The reason for this is not just a rule that I came up with. The rule comes with the strategy. The rule comes with the strategy. If you enter an M formation or a first leg entry, you have to count 2 hours from that entry. If market makers have not moved the price away from that area within 2 hours, then just know that the trade is invalid and it's not gonna play out. Just like the one that I showed you here on EURGBP, 2 hours has reached from this entry, 2 hours here. The trade is no longer valid if it comes back to this entry. So that's why you move your stop loss to your entry because it's not going to work out anymore, right? Becomes a uh like for example, look at this pair here now. You can see you have this W formation here. If you count 2 hours from here, what happens now is if they give you a first leg and they give you a second leg, you start counting 2 hours. If they give you a third leg, you reset the clock, start counting 2 hours again from this third leg, right? So for example, you can see they give a third leg here. This is the third leg. You start counting 2 hours from there again. This is exactly 2 hours. This blue candle is 2 hours. This blue candle is 2 hours. So if your stop loss is here, close the trade here. Don't let them prove you wrong. The trade is no longer valid. Close the trade at that point. They don't need to wait all day for them to come and hit your stop loss. Once 2 hours has reached, trade is not in profit, close the trade, right? If the trade is in profit and it has not hit my take profits and 2 hours has reached, move the stop loss to break even and then see what happens from there. Someone says, how many days do you have to trade the Fund Next challenge? Well, the Fund Next challenge, there's no time limit. You can trade the Fund Next challenge as long as you want, or as long as it takes you, right? You trade the Fund Next challenge as long as it takes you. You can take if it takes you 2 months, 3 months, 4 months, there's no problem. You can trade as long as you want. But you're gonna notice there's a 5-day minimum trading days. That's what some of you get confused with. What this means is if you pass the challenge in less than 5 days, then you have to wait for 5 days for you to move to the next phase. So if you are in phase one and you pass it within 4 days or below 5 days, then you have to wait for 5 days to complete for you to move to the next phase. And what you can do, let's say you pass the challenge in 2 days, right? And now remaining 3 days for you for you to wait for it to complete. What you just do is just open 0.01 trades. Just open 0.01 and close it. And then for the next 3 days, open 0.01 till it's completes 5 days, and then you're good to go. What's the win rate for this? Someone said, what's the win rate for my strategy? Well, the win rate that I got when I backtested my own strategy is I got to 60% to 65% win rates, right? 60 to 65% win rates. If you backtest by yourself, you're going to get something different. Why? Because what you're seeing is not what I'm seeing, right? What you're seeing is not what I'm seeing. We're not seeing the same things, right? So even if I teach you the strategy, you have to do your own due diligence and come up and come up with your own win rates. Backtest, tweak the things that you need to tweak, adjust the things that you need to adjust to increase your win rates, right? So you might guess maybe like a 50% win rates or maybe like 40% win rates. But the overall win rate for the strategy is like 60, 65% win rates. Now, also, what you're going to also have to note is when I tell you or when someone tells you that the win rate is 60% or 50% or whatever percentage that they tell you, you have to also take to note that every month is going to be different. There are some months that you're going to have 50% win rate. There's some months you're going to have 60% win rate. There's some months you're going to have 80% win rate. There's some months you're going to have 70% win rate. There's some months you're going to have 30% win rate, right? There are good months, there are bad months, but you have to know that overall, you know that the average, basically we're talking about averages, right? We're talking about averages. The average would be probably like 60%, 65%. But some months are going to be different. Some months you might have 60, some months you have 70, 80, 90, 50, 40, right? But if you gather 12 months together, how you can how you can come up with um the most accurate win rate is if you measure like 50 to 100 trades. 50 to 100 trades, calculate the win rate, right? Then you come up with a good solid win rate. But if you come up with a win rate with just 10 trades, that's not going to be accurate. If you come up with win rates with just 20 trades, that's not going to be much. It's not really going to be accurate. But let's say 30 to 50, and then all the way up to 100, right? That's going to be an accurate win rate. Yeah, looks like there are a lot of questions here. I'm going to be ending the call in 5 minutes. All right. I'm going to be ending the call in 5 minutes. It's been 1 hour. I actually planned it to be like 30, 40 minutes, but I've extended it to be like 1 hour. My voice is starting to hurt. Why do most people see levels different? Okay, someone says, why do most people see levels different? Well, that's what I just said. That if you're coming up with your win rate, for example, the things that I'm seeing, you are seeing something differently. So you have to train your own eyes to see things more clearly, right? What I'm seeing, you might not see it because everyone has different levels of education. Many people have different levels of understanding, right? So what you see is going to be different from what I see. It might not be completely different, but it might be different to a certain extent. But the thing about the levels now is one thing that you need to know about levels is once price has moved 2 levels, you can trade in any direction. Right, you can trade either buys or sells. Once price has moved 2 levels, you can trade buys or sells. You can trade up or down. But at level one, for example, let's say price is going down, then you have level one like this, then you have level two, level three. At this point here, you can only take buys. The reason why is because they just reversed this downtrend. They just reversed this trend. So they're in the process of reversing that trend. So this is just the early stages of reversing the trend. This is level one here. You have to trade only buys here. But once they've gone 2 levels, you can trade either buys or sells. That's the way I do that's the way I trade it, right? But if I'm trading continuations, then I just follow the trend, right? But I trade reversals and I trade continuation. I trade both of them basically, right? So that's what you have to note about that. Yeah, you guys see things, everyone sees things in their own unique ways, right? I might look at an M formation like this and say, oh, I don't like this M formation. Another person might look at that M formation and say, wow, this is a very beautiful M formation, right? One person might see this resistance level, another person might see another resistance level here, right? So you just have to, what you have to do is, oh, this is what I did. I learned BTMM, right? I learned BTMM, but I don't trade the exact way the person I learned it from trades. I trade it in my own unique way. I tweaked some things in the strategy to make it suit my own style, right? To make it suit my own style. For example, don't like trading M and W M formations that are like this. I like it to come to this exact high for me to look for sells. But other people might take a sell here. I just prefer it to come to this level here. All right, so you're gonna see things in your own unique way. You just have to come up with your own style, come up with your own, find out what works for you. I can't tell you that you must use this style or you must use this style or you must do this or you must do that. You come up with your own style. I'm giving you the concept. I'm showing you, okay, I've told you now that, okay, Tuesday, Wednesday, Thursday, especially Wednesday, Thursday, you should expect a reversal. That's a midweek reversal. That's what I explained in the class yesterday. So I've told you, okay, Wednesday, Thursday, you should be expecting a reversal to happen, right? Now, it doesn't happen every single time, but it happens consistently. Now, your job is to look for how you can take advantage of that knowledge and look for build a playbook or build a strategy or build a setup that revolves around that, right? You're looking for reversals maybe during the week, midweek, look for entry patterns to enter the reversal during midweek, right? So just find your own style. If you like the M&W formations, follow the M&W formations. If you like levels, follow levels. If you find that levels are too complicated for you, there are other ways of identifying the trend. You don't have to use levels. There are other ways of identifying the trend. I personally just chose to use levels because I prefer using levels. I have used market structure to identify levels. I can use moving averages to identify levels. For example, this indicator that you can see here, this indicator buy sell signals, this shows EMAs, right? You can see EMA 15, 13. I used to use EMAs before to identify trends. I used to use the 50 EMA and the 200 EMA and the 13 EMA to identify market trends. But I don't do that anymore because I've gotten to the level, because of my experience level, I can identify the trend without the moving averages, right? So I don't use moving averages anymore. So you just have to find what works for you. Like inside my market maker mastery course, I gave 3 different ways of identifying the trend. You can use moving averages. You can even use moving averages to count levels. So you can use the moving averages to identify the trend. You can use basic market structure, higher highs, higher lows, higher highs, higher lows to identify the trend. So when I tell you something, when I show you that, okay, you have agent session consolidation, you have consolidation, you have breakouts, you have information reverse. Now, all you have to do is trade this with the trend. If you know that, okay, if you're using moving averages above, if moving average above price, then that's a downtrend. You know that that's a downtrend. You're looking for sales here. If you're using market structure, you look for higher highs, higher lows. If it's a downtrend and you're identifying lower highs and lower lows, then just look for sales. Look for this pattern. Look for sales. That's it, right? So just look for what works for you. Everyone sees things in different ways. All right, so I'm going to be answering the last question here. Does this reversal happens? Yeah, reversal happens on all pairs. You can go to any pair you like. You're going to see patterns. You can go to USDZR. There's a currency called USDZR, which is US dollar versus South African rand. How many times have you heard of that currency pair before? You're going to see the exact things I'm teaching you today. You're going to still see it there. In fact, this was a trade. This was just backtesting. I didn't actually take this trade. This was just backtesting. You can see, what do we have? Start of the week, Sunday, Monday, consolidation here, right? Consolidation here, break to the downside, break to the upside, information at this high, take a sell here. If you're a swing trader, you hold this for 2 days, you've caught that. If you hold it for 3 days, for 3 levels, you've caught that. And you can see how many levels do we have here, how many days do we have here. You can see level 1, this is the first day of the reversal, second day of the reversal, third day of the reversal. What do we have? Price reverse from that area, right? So understanding liquidity, understanding market structure, understanding everything that I just told you, you can see this is the low of this week here, right? This is a low here. Now, let's say you took this sell here and you want to swing. Let's say you took a sell here. This is a good area to target as a take profit. Also, let's say you didn't take that sell. Let's say you saw 1, 2, and you saw 3. Where did this third one come from? They came to take out the liquidity below this area, took out liquidity below this area, and then what happened after that? They reversed from there, right? And then continue back up. What do we have here? We have Asian session consolidation, break to the downside, go back up, consolidation, break to the downside, go back up, consolidation, break to the downside, go back up, right? If you identify that this is an uptrend, then you simply just trade in that direction. So you can see that the concept happens consistently on all these pairs. You can see this is a very beautiful pattern here, consolidation, breakout, information, reverse, back, down. So it's just about understanding what you're looking for Are you trading continuations? Are you trading reversals? If you're trading reversals, what days are you trading? It's Wednesday, Thursday, Tuesday, Wednesday, Thursday, right? Where's the liquidity? Where's the high of the week, low of the week? So just to briefly explain this, if you know that after 3 levels or after 3 days, the market usually tends to reverse after 3 levels, and you count, okay, this is level one, this is level two, this is level three. And then you now identify that there's a low that is down here that they could use to take out liquidity. You know that you're expecting a reversal. Look at everything plays out together. Everything, like, you have to piece the puzzle together. Now you've gotten, okay, you've gotten 3 levels down. You know that you're expecting a reversal. That's one. That's the first confirmation. You're expecting a reversal. Second confirmation is you have the start of the week consolidation here. Price breaks to the downside, so you're expecting a reversal back up. That's second confirmation. What's the third confirmation? You have liquidity down here that you can take out. That's the third confirmation. What's the fourth confirmation? You have Asian session consolidation right on top of this box, and you have the breakout to the downside. And you know that when price consolidates like this and breaks to the downside, you expect a reversal, right? All these things coming into play here will make you take this trade and take it back up. So you can see level one, level two, level three, expecting a reversal, stop on to this low, stop on here, Asian session consolidation, London session breakouts, trade reversal back up. That's it. All right. So it's just about understanding what works for you, how you see the market, and all those things, right? So you can find my BTMM tutorial video on my YouTube channel. All my videos are about BTMM. All the concept I'm explaining to you, I learned it from BTMM. So it's not like you're just gonna see, okay, this is BTMM tutorial here. No, all the concept I'm teaching you today, I learned it from BTMM. That's it. Liquidity, highs, lows, high of the day, low of the day, high of the week, low of the week, M formation, W formation, head and shoulders. All those things are BTMM concepts, which you're gonna see on other concepts too, like SMC, ICT. You're gonna see all those concepts there, but it's also on BTMM, right? And I learned BTMM, I didn't know anything about ICT. So some people think that ICT came up with all these concepts. He didn't really come up with all the concepts. He took some from other places and learned from other places and then put it into his own. That's just it right there. There are people that have come up with the concept before that, right? So, okay, someone says, okay, last question. This is going to be the last question. I've been extending it. This is going to be the last question. So, Sister, thank you very much for, okay, let me just copy it and paste it here so you guys can see. Let's see. So thank you very much for this valuable information. My question is, what advice would you give to that trader who is still struggling with trading? Perhaps a brief history of your forex journey could help. Thank you, bro. Okay, so basically, basically, if you're struggling with trading right now, uh, just know that you have to be patient. I've been trading for 5 years. It's no joke. All right. My first year, I was trading support and resistance and all those things. I blew accounts. My first account that I blew, I think I was 16 back then. My dad gave me $100 to trade. He gave me the money. I blew the money that week. I was like, dang. In my mind, I was like, I'm going to turn this $100 to $10,000 because the videos that you see on YouTube back then, the type of videos that you see on YouTube back then. I don't know if those type of videos are still here because I think maybe beginners usually watch those videos where you see how to turn $100 to $10,000 in 5 days. And then you click on it and then you watch, oh, let me watch. Maybe I can turn my $100 to $10,000. You're not going to do that. It's going to, those things are just clickbait to make you watch their videos, right? So that was the mindset that I had then. I was going to turn $100 to $1,000, then $1,000 to 100 million. Those things don't work, right? So my dad gave me the money. I blew the money. He gave me again. I blew the money. I was like, wow, seems like this support and resistance stuff is not working. So I was like, okay, maybe it's a strategy that's not working. So that's when I stumbled upon a strategy. Back then I was trading concepts. It's like a BTMM concept, but the guy didn't tell us that it was BTMM. I didn't know it was BTMM basically. It was when I entered BTMM that I was like, oh wow. So this is actually what I was learning. This was what I was trading back then. You have your wedge formation. Price is going to break to the upside and then reverse, right? This is what I was trading back then, which is actually the same, kind of like the same thing I'm trading right now, but in a different way. So I started to learn this one. My dad gave me about $500 to trade. The $500 increased to like 1,000, then 2,000. And then I was trading with my friend. We wanted it to get to like $3,000, and then it got to like $3,000. It got to like 2,999. Yeah, it got to like 2,999. 2,999. And then the guy was waiting for it to enter 3,000. So he didn't close the trade. Well, I was waiting for it to reach 3,000, and then Legend has it till today. It didn't get to 3,000, so the account blew from there, right? So we dropped to 1,000, then zero, blew the accounts. I was depressed. I was like, wow, this trading stuff is crazy. Like, how do you just lose that amount of money just like that? So I had to start working on myself, learn strategies, learn psychology. But the thing is, all you have to just do right now, if you're struggling in trading, is get your strategy right. Get a strategy. Know your win rate. This is very important. Know your win rate and know your risk to reward. You have to know those two things. If you don't know those two things, if you don't know your win rates and don't know your risk to reward, then you don't know if your strategy works and you're just trading blindly. You don't know what to expect. Anything can happen. You don't know what's happening, right? So know your win rate. If you know your win rate and you know your risk to reward, then that's the beginning step to having the right mindset. You can't have the right mindset if you don't know your win rate and your risk to reward because you're trading blindly, right? So once you have your win rate and your risk reward, which you have to get by back testing, you can't escape that. You have to back test 20 trades, 30 trades, 40 trades, 50 trades. Like you have to back test your life. You have to practice and practice and practice. I think I can even show you. Um, I have you have to journal like as you're back testing, you have to also journal as you're back testing. I think in the last call that I last okay no the live call I did on January, I showed you guys I showed you guys my trading journal. I use Google Sheets. Let me just show you real quick. All right. So if you look here, you can see this Google Sheets. These are different setups that I've back tested. Right. So you can see if you look at the names, you can see this is 1 hour charts. Then FX signature trade. There's a trade called 22 trades. There's safety trade with a 1 to 3 risk to reward. I've done with a 1 to 2 risk to reward. Right. This is 2022 data. This is 2024. Let's see, 30 trade sample, January, February, March, April, May, June, July. 2023, backtested data. This is backtested data from January all the way to December. If you open, let's say you open this one now, you're gonna see all the data, all the pairs that I'm trading. Assuming I'm risking 1% with a 1 to 2 risk reward. Okay, these are the trades that showed up on week one. This is week one. These are the trades that showed up. These are trades that showed up here. These are trades that showed up here. How many wins? How many losses? What's the win rate? 60%. How do you get this? How do you get this 60%? This 60% for the month, basically, right? So it calculates all the trades here and all the trades here, get your win rate. That's 60% for the month, right? You go to another pair, let's say, so I sit to another pair, to another one, let's say January. Let's see how January was. So January smooth. So you can see you have the trades here for the week, trades here for the week, trades here for the week. What's the win rate? 73% for this week. If you calculate all the wins and all the losses all together, that's a 73% win rate. So you have to backtest and know all these things. If you don't know all these things, then you don't know what to expect. Like this now, with all this data that I have, I can now say, okay, now I know how many trades I can expect to get in a week, right? By calculating the average over all these months, I can know, okay, in a week, I actually expect like 3 to 5 trades, right? How many losses can I get? How many consecutive losses can I get? You can see here, you have 1, 2, 3, 4. 4 losses in a row. We used to be trading that strategy. We have 4 losses in a row. Let's say you took these 4 losses in a row. Oh, mistake. Let's say you took these 4 losses in a row, 1, 2, 3, 4. Some of you might start changing your strategy or start doubting the strategy, not knowing that the following week you're gonna get like 3, 4 wins in a row or 5 wins. You don't know. You understand? So you have to know all these things. That's what's gonna help you. That's what's gonna help you stay profitable and be consistent. So get your strategy right, know your win rate, know your risk reward, know your psychology, and then use proper risk management. Don't be gambling. Don't be stacking trades anyhow. Use proper risk management. Always use your stop loss, and then you should be good to go. And I think that is all I have to say for now. So that's all I have to say for now. I'm gonna be ending this call now. Those of you that attended the class, thank you for having me. Thank you for joining, and then maybe we can make this a consistent thing. If you guys want to learn more, I have all these concepts. I explain them inside my Market Maker Mastery course. So if you want to enroll for the course, hit me up on Telegram, then I'll get you in on the course. If you want to get a Funding Next account, or you have any more questions to ask regarding Funding Next, send me a message on Telegram. Or maybe you have any more questions regarding the strategy, ask me on Telegram, and then I'll try and reply when I have time. And I'll see you guys on the next live class. All right, peace.